This robot company is about to be valued at roughly $9 billion. Unitree has priced its Shanghai IPO at 150 yuan and 80 cents per share. The offering is expected to raise about 6.1 billion yuan for just 10% of the company. That implies a value near 61 billion yuan, or roughly $9 billion US dollars. And here's the part that should stop you. That price is about 36 times Unitree's entire 2025 revenue. So has China just created the first publicly priced winner of the humanoid robot race? Or are investors paying a superhero valuation for robots whose most famous skill is still looking incredible on camera? Today, we are separating Unitree's real business from the backflips and asking what this IPO means for Tesla, the global robot market, and anyone betting that humanoids are the next trillion-dollar platform. Start with what is real. According to information published by the Shanghai Stock Exchange, Unitree is offering about 40.45 million shares at 150.80 yuan each. Those shares represent 10% of the company after the offering, and the deal is expected to raise about 6.1 billion yuan. The demand was extraordinary. After invalid and highest-priced bids were removed, proposed offline subscriptions still totaled more than 71 billion shares. That was roughly 2,761 times the initial offline offering size before strategic placement adjustments. That does not mean 2,761 times as many people will buy a robot. It means investors desperately wanted access to a scarce offering connected to one of the market's most exciting narratives, and Unitree has mastered that narrative. Its robots dance, fight, run, recover from falls, and perform moves that make most industrial machines look like office furniture. But the IPO is not selling a highlight reel. It is selling a future stream of cash flows. The real question is whether the business underneath the spectacle is strong enough to carry the price. Unitree was founded in 2016. From 2023 through 2025, the company says it sold 33,294 quadruped robots and 5,632 humanoid robots. The humanoid ramp accelerated sharply. Unitree says it shipped more than 5,500 humanoids in 2025 alone, excluding wheeled dual-arm machines. Revenue increased from about 159 million yuan in 2023 to 393 million in 2024, then jumped to 1.7 billion yuan in 2025. The company also reported about 278 million yuan in net profit for 2025. That matters. Most famous humanoid companies are private, and many still discuss pilots, reservations, partnerships, or future production targets. Unitree can point to thousands of shipped machines, rapidly growing revenue, and a reported profit. It is also not purely a domestic story. Overseas sales generated about 732 million yuan in 2025, nearly 44% of main business revenue. This is why dismissing Unitree as a viral video factory would be a mistake. The company has built a product catalog, a supply chain, export demand, and real manufacturing experience. But the shipment mix reveals the first complication. Across those 3 years, Unitree sold almost 6 quadruped robots for every humanoid. Robot dogs, research platforms, education units, and developer hardware helped build the company that investors now value as a humanoid leader. That is not a weakness by itself. It is simply a reminder that the current business and the future story are not yet the same thing. Unitree's most important advantage may be hiding in plain sight. It makes advanced robots feel almost purchasable. Its R1 starts around $4,900. The G1 starts around $13,500. The larger H2 is listed around $29,900, while configurations of the full-size H1 can approach $90,000. Those are not impulse purchases, but in robotics, they are disruptive prices. A university lab, developer, manufacturer, or startup can buy a capable platform without funding an entire robot company first. That creates more users, more experiments, more failure data, and potentially more software written around Unitree hardware. This is the strategy that made personal computers and smartphones powerful platforms. Ship enough standardized hardware, let developers discover uses the manufacturer did not predict, and improve the product while the ecosystem expands. Unitree is not there yet. A humanoid robot is much harder to support than a laptop. Motors wear out, gearboxes take impacts, batteries age, hands break. A software update cannot tighten a loose bolt. Still, low prices change who gets to participate, and that may matter more than winning the cleanest demo. Now we reach the most important distinction in robotics. A robot doing a backflip proves exceptional control, balance, and mechanical capability. It does not prove the robot can perform useful work for 8 hours in an unpredictable environment. Mobility is not autonomy, autonomy is not reliability, and reliability is not a business model. A backflip is impressive. My dishwasher has one job and still finds new ways to disappoint me. For customers, the boring questions decide everything. How often does the robot need human intervention? How quickly can a technician repair it? Can it repeat the same task thousands of times? What happens when lighting changes, an object moves, a floor becomes slippery, or a person walks into its path? Company demonstrations are useful evidence of capability, but they are controlled evidence. They are selected, edited, and designed to show what the machine can do at its best. Commercial buyers pay for the average hour, not the best 20 seconds. This is the central open loop in Unitree's valuation. Investors are not merely paying for motors and metal. They are betting that increasingly capable software will turn affordable hardware into productive labor. Unitree's second major advantage is location. China already has deep supply chains for electric motors, batteries, power electronics, sensors, precision machining, consumer electronics, and industrial automation. Those capabilities do not automatically create a great humanoid robot, but they reduce the time and cost required to iterate. The broader export data shows the direction. China became a net exporter of industrial robots in 2025. In the first half of 2026, industrial robot exports reached about 6.29 billion yuan, up 18.6% from a year earlier, across 141 countries and regions. Unitree plans to invest roughly 4.2 billion yuan of its IPO proceeds into robot model research, robot body development, new products, and an intelligent robot manufacturing base. In other words, the IPO is not just a scoreboard, it is fuel. If Unitree can turn that money into lower costs, better hands, longer uptime, and faster software learning, the public offering could widen its manufacturing lead. If the money produces more theatrical demos without durable paid deployments, the valuation will become much harder to defend. Tesla approaches robotics from the opposite direction. It has enormous manufacturing resources, AI infrastructure, battery expertise, and factories where Optimus can theoretically be tested against real internal tasks. Tesla does not need to sell a robot immediately to learn from one. Unitree has a different advantage. It already sells accessible hardware to outside customers. It can learn from a broader range of developers, laboratories, and use cases. Tesla's strategy is vertically integrated and mission-driven. Unitree's is product-driven and increasingly ecosystem-driven. One company can test robots inside its own industrial empire. The other can put thousands of machines into the hands of people who will try things the manufacturer never imagined. Neither model guarantees a general-purpose worker. And this is not a robot beauty contest. The winner will not be the machine with the best launch video. It will be the company that can deliver useful work at a lower total cost than a human, a conventional machine, or simply doing nothing. Unitree's IPO forces every competitor to confront a new benchmark. A robot maker now has public revenue, public profit claims, a public valuation, and eventually a public stock chart measuring belief in real time. The strongest bull case is straightforward. Unitree has already crossed several barriers that stop most robotics startups. It manufactures at scale, ships internationally, offers products at multiple price points, and has created a brand people recognize. Its lower-cost machines attract developers. More developers create more applications and training data. More demand increases manufacturing volume. Higher volume can lower component costs. Lower costs bring in more customers. If that loop works, Unitree does not need every R1 or G1 to become a fully autonomous household employee next year. It can sell the picks and shovels of embodied AI while the software improves. The IPO proceeds also give the company room to invest through the expensive transition from research hardware to reliable products. And public visibility can help recruit engineers, reassure suppliers, finance facilities, and win customers that hesitate to depend on a small private startup. The optimistic interpretation is that Unitree is becoming the Android-like hardware platform of robotics, widely available, comparatively affordable, and open to many developers and use cases. The bear case begins with the price. An implied valuation near 61 billion yuan is roughly 36 times Unitree's 2025 revenue and around 219 times its reported 2025 net profit. Those are approximate future signal calculations, not the company's own valuation ratios, but they reveal how much future success is already embedded in the offer price. The market is assuming continued rapid growth, expanding humanoid demand, defensible technology, successful manufacturing, and improving commercial usefulness. Any of those can disappoint. Hardware margins can compress. Competitors can undercut prices. Export restrictions can complicate overseas sales. Support costs can rise. Customers may discover that conventional automation is cheaper and more reliable for many jobs. And the hardest software problem remains unresolved across the industry. Getting a robot to generalize safely when the real world refuses to behave like a demonstration. The stock market has never met a futuristic story it could not decorate with an ambitious multiple. Unitree now has to convert that story into operating proof. So what should viewers watch after the listing? First, commercial deployment. Look for named customers, paid use cases, and repeat orders rather than one-time pilots. Second, intervention rate. A useful robot should need less human rescue over time. Third, service economics. Warranty expense, repair time, spare parts, and field support will show whether low purchase prices remain low in practice. Fourth, product mix. If humanoids become a larger share of revenue without destroying margins, the future story is moving into the present. Fifth, software and ecosystem growth. Watch whether outside developers build applications that customers actually pay to use. These signals matter more than a first-day stock pop. A dramatic debut can measure scarcity and excitement. It cannot measure years of robot uptime. Here is the future signal verdict. Unitree has already proved something important. Advanced robot hardware can become cheaper, ship in meaningful volume, reach customers around the world, and support a fast-growing business. It has not yet proved the larger promise built into a roughly $9 billion valuation, that general-purpose humanoids can deliver reliable, economical labor at scale. That is why this IPO matters. It turns the robot race from a collection of private projections into a public scorecard. Tesla, Figure, and every other serious robot company now have a competitor whose progress can be measured in products, revenue, manufacturing investment, and market value. The backflips got Unitree attention. The next phase will be decided by boring work repeated thousands of times when nobody is filming. Would you value Unitree as a robot manufacturer today or as an embodied AI platform for tomorrow? Tell us what evidence would convince you in the comments. We will respond to as many questions as possible. And if you want deeply researched stories about the companies building the future, subscribe to Future Signal.